So there's a blockchain holding $822 million of BlackRock's money right now, and almost nobody uses it. I mean that literally. Everything actually working inside that chain, the lending, the borrowing, the trading, adds up to about $107 million, ranked 25, behind chains you've never heard of. But the dollar sitting on top of it, nearly 2 billion. And in the last 30 days, $39 billion moved across it. So look, either somebody at BlackRock made a very strange mistake, or we've all been measuring this thing with the wrong ruler. Yeah, it's the second one. To understand why BlackRock is there, you go back to Facebook. In 2019, Facebook announced Libra, a global digital currency, and the reaction was instant and brutal. Within weeks, the partners walked: PayPal, eBay, Stripe, Visa. They renamed it Diem to shake the Facebook smell off it. Didn't work. And on the last day of January 2022, it was over. Sold to Silvergate Bank for about $182 million. Their CEO said it became clear from their dialogue with federal regulators that the project could not move ahead. So the money was gone. The engineers and their ideas were not. And a couple of them walked out the door. Mo Sheikh, the business half, and Avery Ching, who was very much not, a PhD in computer engineering who, by the end of his decade at Meta, was the tech lead on Diem itself. He runs Aptos Labs today, and they take the crown jewel with them, a language called Move, invented at Meta by Sam Blackshear, who called it a language for programming with scarcity. But here's the wrinkle. Blackshear didn't go to Aptos. He co-founded Sui, Aptos' closest rival. And if you open the Aptos codebase today, he's still one of its most active contributors. That's how tangled this family tree is. They're not enemies, they're siblings. So Aptos raises hundreds of millions from A16Z and Jump Crypto and goes live in October 2022. And they launch with a number: 160,000 transactions per second. Day one, the chain did about 4. Yeah, hold that thought. Because here's what surprised me. The speed was never a lie. 2 ideas. First, move. In most smart contract languages, your money is just a number in a spreadsheet cell. And if a programmer forgets a step, or somebody sneaks back into that function before the number gets written down, you can spend the same coin twice. An enormous share of crypto hacks live right there. Move treats a coin as a thing, a resource. It can't be copied, and it can't be quietly thrown away. So the compiler refuses to even build a program that could duplicate a coin or lose one. Solidity money is a spreadsheet cell. Move money is a bearer banknote. To hand it to you, I physically hand it over. I can't photocopy it. Second, Block-STM. Most chains run transactions one at a time in a queue, so everyone agrees on the result. Aptos runs them all at once, optimistically, then reruns the ones that collided. It's a team editing one document at the same time, with a very fast conflict checker cleaning up behind them. And Aptos kept shipping. In June of 2025, they switched on something called Baby Raptr, and by that December, blocks were closing in under 50 milliseconds. That's real. That's mainnet, right now. So, a correction, said with love, because nearly every video about this chain gets it wrong. People say Aptos runs Raptr. It doesn't. Go open the proposal yourself. AIP 106. Status. Final. And the summary tells you plainly that Baby Raptr is a version of Raptr. The full protocol, the one behind that famous 250,000 per second headline, is still a research paper. So what does the real chain actually do? About 140 transactions a second. Its best reading ever is just under 13,000. Now, that 160,000 ceiling isn't a fib, It's a real benchmark of the engine running flat out. It's honest. Nobody's just asking the chain to do it. The engine is a supercar. The road is empty. Which raises the obvious question. And I want to be straight with you, because this is the part most people skip. A chain that fast, that cheap, that safe should be packed. It is not. Everything locked into Aptos DeFi today comes to about $107 million, ranked 25 out of 455 chains. Its sibling SWI sits around 437 million. And it gets more awkward. Merkle Trade, the flagship trading app built natively on Aptos, with something like $30 billion of lifetime volume, shut down in February. But before we call it a ghost town, that locked value number is measured in dollars, so it moves when the token price moves, and usage is not falling. Aptos did roughly 1.3 billion transactions last quarter. On the 2nd of July, it set a record, over 16 million transactions in a single day. 97 validators, 428 full nodes, humming along. So the chain is busy. It's extremely busy. It's just not busy doing DeFi. And while we're being honest, Aptos has had exactly one serious outage. October 2023, about 5 hours. And it wasn't a hack. A tiny inconsistency in how gas got counted had been sitting there for months, invisible. Then they shipped a feature that published every transaction's gas on chain. The validators could suddenly see each other's numbers. The numbers didn't match, and the chain stopped. They turned the lights on, and the chain saw itself. And on decentralization, it takes 14 validators acting together to halt Aptos. More than a third of the stake also runs on Amazon's cloud. So if you're rigorous, the number that really matters might be closer to 1. That's not a scandal. It's measurable, it's public, it's fixable, but you should know it. So let's go back to that opening number, because here's where the whole picture flips over. BlackRock runs a tokenized fund called BUIDL, treasuries, cash, repo, the boring, enormous end of finance. It started on Ethereum and it arrived on Aptos in November of 2024. Then, across about 11 days at the end of October 2025, the BUIDL balance on Aptos went from $43 million to $544 million. Today, it sits near $822 million, which makes Aptos the second biggest chain for BlackRock's BUIDL, behind only Ethereum. And that was October of 2025, not 2026. I've watched that get repeated wrong everywhere. Small thing. But if we're sloppy with the small things, why would you trust us on the big ones? And BlackRock isn't alone. Franklin Templeton brought its money market fund over in October 2024. Apollo's credit fund landed in January 2025, and Ondo's there too. So add it up. The stablecoins on Aptos come to about $1.9 billion. But here's the detail that separates an answer from a headline. The data provider files BlackRock's BUIDL under stablecoins. So a big slice of that headline is a tokenized treasury fund, not money anybody is spending. The real payment stablecoins, your Tether and your USDC, come to a little over $1 billion. And I checked it against a second independent source. Different filing cabinet, same total. Now, here's the one that genuinely stopped me. Those real-world assets on Aptos, $638 million across 14 different funds. How many wallets do you suppose hold them? 8. 8 addresses. 2/3 of $1 billion of BlackRock and Franklin Templeton and Apollo sitting in 8 wallets. And meanwhile, the stablecoins on that same chain moved $39 billion in 30 days, up over 100%, across 900,000 holders. So, 39 billion flowing through, 107 million working inside. And I'll be straight about the other side too. That real-world asset pile is down about 77% in the last month. Somebody redeemed and moved on, and I'm not going to invent a reason for you. But that shape, enormous flow, a tiny yield economy, a handful of custodians, that is not a failed casino. That's a pipe. So if you ran Aptos and you finally admitted to yourself, we're not a casino, we're plumbing for institutional money at machine speed, what would you build next? Well, exactly what they've been shipping. In February, they launched Decibel, a fully on-chain derivatives exchange, incubated by Aptos Labs itself. The actual order book, on-chain, over $1 billion in volume. That's the proof that 50-millisecond blocks aren't a party trick, they're market structure. Then in April, they turned on confidential APT, and this one's clever. Your balance gets encrypted with zero-knowledge cryptography, so the public can't see it. But it's opt-in, and it ships with auditor keys, meaning you can hand a regulator a key that shows them everything, while the rest of the world sees nothing. Think about who needs that. That's not a feature for degens, that's a feature for a bank. And it passed governance with every single vote in favor. In March, the token got rebuilt around the same instinct, a hard cap at 2.1 billion, 100% of gas fees burned, staking rewards cut from about 5% to under 3%. That's a chain optimizing for settlement, not farming. And in May, the foundation and labs put over $50 million behind agentic AI and institutional trading plumbing, encrypted mempools, confidential perpetuals, connectivity over FIX and CCXT. Those aren't crypto words, those are Wall Street words. Now the AI part, and let me separate what's real from what's promised, because this is where everybody oversells. What's shipped is modest and useful. A move agent kit and a server that lets AI coding assistants read the Aptos docs and write move for you. That exists today. What's promised is Shelby, built with Jump Crypto, storage where you pay for reads, not just writes, because an AI model reads the same data over and over and over. But it isn't live, it's early access. Their own homepage says so, and it matters that we say so too. And finally, on trust. Last week, a security firm disclosed a serious bug in the Move virtual machine. They found it, Aptos patched it back in February, and it went public months later, once the fix was everywhere. Not one user ever lost $1. You'll see some very large, very scary numbers attached to that story. Ignore them. Nothing was ever at risk. That's a security process doing exactly what it's supposed to do, quietly, before anybody got hurt. So where does that leave us? Aptos set out to be the fastest chain in the world, and by the numbers, it basically is. Blocks under 50 milliseconds. A language that makes a whole category of hacks impossible to even write down. And then, almost nobody came to trade on it. While BlackRock and Franklin Templeton and Apollo quietly moved in upstairs. $39 billion a month, flowing through a chain with a $100 million DeFi economy. That's not a failing casino. That's a settlement rail that got mislabeled by its own marketing and by nearly everybody covering it. And a settlement rail is a genuinely good business. It's just a different business from the one everyone was scoring it against. So the most useful thing I can hand you isn't an opinion about Aptos, it's the ruler. 2 habits, and they cost nothing. First, take any chain's DeFi value locked and divide it by the dollars actually sitting on it. Both numbers are free on DefiLlama's public API. Aptos comes out around 18-1. Money resting, not working. That one ratio tells you whether you're looking at an economy or a pipe. Second, before you believe a chain shipped something, open its proposal repository and read the status field. Draft is not final. Every source is in the write-up linked below. Go check my work. Seriously, please do.